Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar, and we are having a rock and roll week here. Traders, we got you involved on the upside in the beginning of the week, turned it around, got you selling for the last couple of days, and we've been nailing them dead on. Thank you, Omni, go, Omni, go. Yeah, all right. So the Omni's been working. Thanks for the applause, guys. No problem back there. The Omni's been dead on, and we got trades set up again for tomorrow, Friday, 02/29/08, leap year. There's a leap year. There's the 29th of Feb this year. That should be something exciting in the markets on its own right. We got a red Omni for tomorrow, a red Omni. We are looking for the S&P to drop, and we're looking for the NASDAQ to follow in suit tomorrow. We have a NASDAQ trade lined up. If you come on down to my site, it's www.livewithoscar.com, and you come in those chat rooms. We'll be more than happy to share the NASDAQ trade with you. All right, traders, last night I showed 3 charts to you, and I said there are 3 good reasons why we should start to break down. This is pure technical analysis, traders. It's something that you can do at home. It's something that we at the Omni Trading Academy can absolutely teach you how to do. And I want to show you these charts. They're right behind me right now. It's the exact same 3 charts that I showed you last night with the reasoning why, technically, these markets should break. I want to go to those charts now and show them to you with Thursday's action on there, and let's see what you think about those charts, traders. Let's go to the charts. I'll be right back to you. Okay, traders, the first chart I want to show you is the first chart you seen last night. This is the Dow Jones Transportation Average, and you've heard me say I think the Dow Jones Transportation Average leads the Dow Jones. And then I drew this line, I drew this average out for you, and I said this is one of the averages that we like to use at the Omni Trading Academy. And the fact that the market fails miserably every time it hits that line, drops down, hits the line, drops down, hits the line again, fails, drops down. Then we get one test, failure. Second test, failure. Third test, I mentioned it was a failure, and that is enough of a reason with all the technical indicators wrapped around it pointing towards the downside that I thought the Dow Jones Transportation's average would have a break on Thursday. And it did for those technical reasons that you see right here. This is the same chart, traders. Let's go look at the next one. Okay, traders, the next chart I want to show you is the second chart you seen last night. It is the SPH8, the S&P, or the ESH8, the daily bar chart of the S&P. And I said to you that these look extremely similar. These moves, you had the up move, the break, the second move, the break. Here you had the up move, the break, the second move, the break. Third time we've seen the pattern, we had the up move, the break, the second move, and a break should come. I also pointed out that there's something I'm using called the parabolic SAR stop and reverse system, and that I noticed that you get 4 dots in between this peak and this peak, and then the crack comes. 4 dots, and then the crack comes. Well, as of yesterday, or as of today, we had the 4 dots, and the market did break today. It started to get hit pretty hard. So the parabolic at this point in time in the calendar is working well, and we'll see what it does on the next formation. But that was my second technical reason why, or at least my second chart, with technical reasons why the market will likely have dropped on Thursday. And there you are, reason number 2. Let's go look at the third chart from yesterday. Okay, traders, the third chart I'm showing you now is the Emini Russell, the ER2H8, if you will. And I mentioned that it has an apex, and the likelihood is that we would come breaking out of the apex after it first does a test up here and then heads down. If you recall, I showed you the apex. It said break it into 4 quadrants. And what will happen is right around the 3rd quadrant, you will get a false test on the upside, and then it'll break out inside the 4th quadrant, or around past the 70 to 75% mark. You would break out of your apex, It's exactly what's going on here right now. We had the false test on the upside on Wednesday, and on Thursday it started to come down. So the analysis is working really well this week, traders. The analysis seems to be right in sync with the markets and the charts, and I think the charts have been talking to us very well all week, and we've been able to listen to them. Take a look at your charts, traders. Do your homework. Pull up these 3 charts. See if you can reenact this for yourselves and learn how to listen to these markets. Okay, traders, so you've seen the charts. That is just pure technical analysis, traders, the way we teach it here at the Omni Trading Academy, working in conjunction with market movement. And I've said this many times, charts are merely a visual look at traders' interpretation of where they think the market will go. Even more than that, it's a visual look at fundamentals. The fundamentals always come out in the charts first. You see the bonds take off almost 3 handles in a day and a half. Gold is just cranking towards the 1,000 mark. Silver now just about near 20. Crude oil at 103. There is no way these markets can go higher, and the charts are telling us that. When I say these markets, I mean the indice markets, the S&P, NASDAQ, Russell, and the indice markets that revolve around it. With oil that high and every product that I can find for raw materials that we trade, such as commodity markets, they're all so overpriced right now. You know what? Let me step back. They're not overpriced. They're probably still underpriced, but they're so expensive right now. There is no way your company that trades on the stock exchange, that produces a product and sends it off to be sold or off to market or off to the consumer, could possibly build that same product as cheaply today as they built it a year ago. In other words, these high-flying commodities and these raw materials that just keep going up in price, they have to affect the bottom line of these companies that make up the stock market. There's no other way to look at this. And then as the dollar goes lower, the cash on hand that these companies have is worth less, which means their bottom line is worth less, which means their stock is worth less, and that's just the way it's going right now. We are in a bear market. This is Friday in a bear market. My theme of the week has been don't fall in love with the upside, traders. And I am telling you that again, even if Friday turns out to be a rally, do not fall in love with the upside. You heard me say it every day this week, with the exception of the one day that we bought them and it did rally. So we've been lucky there. But I kid you not, do not fall in love with the upside, traders. It will not help. Rallies are a place where we look for shorts in this environment, and it's a spot where clearing firms can liquidate some of their heavy holdings. That's all that happens in a bear market when it rallies. With that in mind, for tomorrow, 022908, the SPH8, the ESH8 for the mini, the red Omni says sell the mid to high 1360s. If it gets up there 1360, kick some out up there. Put your stop in a sensible place. Place your stops first. You know the story behind that, traders. Always put your stops in first. Then get your sell order in. If we get up to the 1360s, get brave. See what happens up there. Omni's profit objective is the high to mid 1340s. So if you can get it in the high 1360s and get out in the mid 1340s, you're having a great day. Or be out by the close. Always be out MOC, market on close, unless otherwise instructed here. So, again, I'll repeat, don't fall in love with the upside. Come to the site and check out our NASDAQ trade. And here's what we're thinking for the S&P. All right, traders, I'm sitting at my desk tonight doing some analysis. And every time a new member joins the site, we get an instant email with the member's name. Can anybody guess who joined the site tonight?
Warren.
Oh, you got it, baby. We had an email come in tonight, and a guy named Warren Buffett joined my site, and his email has something to do with the same name. So could you imagine? I mean, of course it's not. Could you imagine someone like Warren Buffett joining our site? If it's you, Warren, we're here, baby. We're going to help you trade. Come on down. I want to hang up my trading hat here and go to your apartment and do this. All right. Who knows? Who knows who the guy is? Warren Buffett, whoever you are welcome here at the OMNI Trading Academy. Make yourself known tomorrow, Warren. Come on down. Say hello to me in the chat rooms. Let's get to know you. All right, traders, don't trade alone. Never trade alone. If you don't know who we are the OMNI Trading Academy, and we are here to teach you how to read these charts and listen to the markets. And that is a fine art that we can certainly teach you at our site. It is so much harder for you to sit by yourself and try to get this right when you can be with us. There are hundreds of Omniacs. We all get together at the site every day. I have video cameras pointed at me, live microphones. I do lessons throughout the day. It is a great place for you to study and for you to hang out while you're trading throughout the day. So traders, don't trade alone. Come join us. Our arms are open. We're here for you. All right, traders, we got lots and lots of videos like this on YouTube right now. There's about 276 or somewhere right near there, 275, 276. 277, huh? Yeah, they go up. How come they go up one every day? What is that, Mike? Anyway, we have 277 videos on YouTube waiting for you. Go to the YouTube spot and start studying. The YouTube spot is www.youtube.com/futures analysts. When you get there, be sure to subscribe to those videos. This way you get notified by YouTube the moment those videos come out. Traders, give me a call, please, anytime, day or night, 702-629-4755. And, of course, continue sending me your emails, traders. I love looking at your analysis. I love the fact that traders send me in homework. I review the homework, and I shoot them back a message on what they think. At least up until we moved here, I've been a little slow in those emails the last few days, but I promise we should be caught up by the end of this week. I've been trying, traders. You guys sent me a lot of stuff, but keep it coming. While we moved here last week, we moved our studio to a new location in Vegas. And, I couldn't answer emails for a few days, so they stacked up a little. But I've been reviewing them, and absolutely I will get back to you, so make sure you send me your emails. All right, traders, I think that's about it for now. We should have a webinar for you over the weekend where we'll study these charts intently and see what we can find together. For now, make sure you get in there, make sure you're brave, keep those dukes up, and keep your emotions out. One of the best ways I can teach you to do that is to say this, and you know what it is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.